Ron Costa here in Las Vegas, Mappable USA Studios. We have so much to go over today on our show. And before we even start the show, we just got to tell everyone out there that we are really getting syndicated in all the right spots. We're getting onto iHeartRadio. We're already on Spotify and all these different places. And we just got onto Google Play and Apple iTunes. So this thing is really taking shape. I'm really happy that we really moved this forward. So, and Vicky Hutchmal is on the phone on the call with us as well. Vicky, how you doing?
I'm doing great today. We're in Las Vegas. The weather's beautiful. What could be better?
Yeah, isn't it great now? People can listen to the Mappable USA broadcast podcast on so many different syndication sources now. Isn't it great?
It's absolutely wonderful that we're able to provide our podcast to so many platforms, to so many people, because we have so much information to pass on.
Yeah.
And today we're talking about qualified opportunity zones and the investments in those, and what a great opportunity that we can provide to investors.
Yes, and we have a friend of the show coming back on the Mappable USA podcast. Welcome, Mark Roderick. Mark, how you doing today?
I am doing very well, thank you very much.
Great. Mark is a second-time guest on the show. We're really happy to have you. I know Mark brings a wealth of knowledge on all kinds of things. And the last time we talked about crowdfunding, the legal aspect of it, and we really wanted to get into more of the real estate thing today. There's a lot of news right now with these qualified opportunity zones. And I know that you've really taken a major leap forward with this on your blog as well. So I don't even know if we can call it crowdfunding, but again, Mark, what are these qualified opportunity zones, and why were they put in place?
Well, I'll answer your second question first. Why were they put in place? There are two possible answers. I will let your listeners take their pick. One, they were put in place to spur economic development in economically distressed areas and thereby help the lower income residents of those areas lift themselves into greater prosperity. That's what you would read in the congressional record. The other answer is that they're really intended as a giveaway to wealthy investors who would have invested in those areas anyway. So you take your pick, but the answer is probably some mix of those two things, really.
Right, and the program, from what I understand, is basically a tax deferral program, is with capital gains. Is that right?
Yeah, it gets a little bit complicated, but the idea is that it's really kind of in two separate parts that don't necessarily have anything to do with one another, other than they're both tax incentives. So the first part is that when you invest in a qualified opportunity zone fund, it allows you to defer, not avoid, but defer your capital gain tax that you incurred selling something else. So you owned, some Apple stock or some paintings or any other capital asset. You sold that at a profit. You have a capital gain. You can invest the capital gain into a qualified opportunity zone fund and defer paying that tax until 2026. So that's one of the aspects, and there's a lot of complicated stuff and subheadings and exceptions to exceptions in there. But then the second savings is if you own the actual qualified opportunity zone fund for 10 years or more, then you don't have to ever pay tax on the appreciation, hopefully appreciation, in the fund itself. So you've invested, $100 in this qualified opportunity zone fund. It built a real estate development in a qualified opportunity zone. It appreciates. Your interest over 10 years goes from being worth $100 to being worth $250. If you sell it at that point, you never pay tax on that 150 of capital gain. So those are the two prongs of how it works.
Well, that's fantastic. I mean, that is it's amazing that the government, I guess the IRS, presents that kind of a program for investors. Actually sounds pretty good for change.
Well, it is. I mean, it definitely can be, which is why there's so much interest in it, because as I say, from an investor's point of view, the best qualified opportunity zone fund is one that was going to invest in a certain area anyway, because everyone's always looking for great deals, and they're always looking for the locations that are going to be next to appreciate quickly. So if you were going to invest in an area anyway, in particular, and now it's a qualified opportunity zone fund, that is it's a terrific benefit.
Well,
yeah, no doubt. Go on, Vicki.
I was thinking that these zones were created, if I understand it correctly, these zones were created as part of the Tax Cut and Jobs Act that President Trump signed in order to help underprivileged or depleted areas in various cities and states to have investors develop them, and that's what created the tax incentive to get the people to do that. So actually, these are good for the community as well as the investors because it promotes growth. Is that right?
Well, I mean, that's the theory. But here's an example. Here's an example of a qualified opportunity zone project that is eligible for the full benefits. You go into a qualified opportunity zone fund, you buy land, you build a parking lot on the land with a little shed, and people park in it. And you hold it for 10 years and you sell it, and you get this 100% capital gain exemption.
Right.
I mean, I think a lot of people smarter than me have questioned whether that kind of project is really accomplishing any kind of, economic development purpose. So there are no rules whatsoever about the kind of business that you can create. Well, I shouldn't quite say that. You can't build an opportunity zone business consisting of a tanning salon or a massage parlor or a golf course and a few other things, which, completely blew my own business plans out of the water. But so there are just a few things that you're not allowed to do. But other than that, you can do anything. And many, there's some businesses that will help the community. There are a lot of businesses that really won't help the community, but you get the tax benefit anyway. So that's where the question is.
It sounds as though the concept it was to provide jobs and opportunities for new business in various areas of cities that had become depleted for whatever reason over time. But until it doesn't appear that there's too many rules and regulations that the IRS or the Treasury has actually created about this, because they're going to happen as it goes forward. This is a new concept, and until you actually do it, they have to decide what you can't do for all the people who took advantage of what they didn't tell you could do.
Yeah, well, I mean, there are not going to be any rules that are going to limit what people can do. And I mean, this concept of economic opportunity zones has been around forever under both federal law and state law. So, policymakers are always trying to solve the problem of blight, not just in urban areas, but in a lot of rural areas and all over the country. If you live in New York City and you drive up the Hudson River and you see all those sad towns along the Hudson River, it used to be manufacturing centers and now are basically hollowed out. So a lot of opportunity zones there too. It's really all over the country, and these kinds of programs have been around for a long time. This is probably the biggest one that I can remember. Just this nationwide enormous tax benefit. And we'll see. It will certainly provide some benefits. I don't think there's any doubt about that. Because as you guys probably know, there's a lot of money flowing into these things.
Oh gosh.
It's huge. Yeah. Yeah,
so
exactly. This is kind of like Go on, Vicki.
Oh, I was just going to say, I thought that in New York, the qualified opportunity zone was the area that Amazon chose to put their new headquarters.
Well, that does happen to be one. They probably did not choose it for that reason, which is another, that's an example of what I was saying before. If you were going to do it anyway, and now you're going to get, this 100% capital gains exclusion, that is an example of a terrific investment. But yes, up on Long Island City,
right.
Part of the campus that they're going to build is in a qualified opportunity zone fund, as it so happens. So it looks like Jeff Bezos made another fabulous investment there.
Right time, right place, right?
Exactly.
Yeah.
Well, we have
Mark, we started this podcast before about talking about this from a real estate perspective, but it sounds like after what you're saying that this is a program that works for any kind of capital gains, whether it's the stock market or if you sell a warehouse or even if you sell your business, right? Isn't that the case? You could take advantage of these for different other
yep. No, absolutely. Yeah, any capital gains, stock market gains, and the stock market has gone up for a long time. It now seems to be going sideways, but I can imagine there have probably been more than a few people who have taken some money off the table from the stock market. One of the reasons you don't sell stocks is you don't have to pay the tax, but with this Opportunity Zone Fund program now on the books, and widely marketed, I bet a lot of folks have taken money off the table in the stock market and said, hey, I'm going to put it into one of these funds. I don't have to pay tax.
Right.
Exactly.
So if somebody has stock, if somebody has stock and they're selling at a huge capital gains, then they have to go and find like Mr. Investor doesn't do this himself. He has to go find a fund that is that specializes or is qualified to invest into these qualified opportunity funds, right? And you just can't go and do it yourself.
Yeah,
right,
and you've got to invest the money within 180 days. So you can't just sit around for years waiting. You got to make a pretty quick decision, and then the Qualified Opportunity Zone Fund has to invest the money pretty quickly. So what's happening in that market right now is these funds are getting investors. They're getting a lot of money, but what do we do with it now? We've got to deploy it very rapidly as a general matter, or we're not going to qualify as a Qualified Opportunity Zone Fund, and then we're going to undercut the whole idea. So there is a little bit of a rush at this point to deploy money. And as you guys know, the U.S. real estate market is sort of awash in capital, particularly the primary cities. So this is just adding more capital, chasing deals. And so it's probably having some kind of effect on deal pricing.
What organization legitimizes the fund? Is it the IRS or is it the Treasury? How does that happen? So if somebody creates a fund, how does that become qualified as a qualified opportunity zone fund?
That's a great question. So first, the